Aloha, I'm Carl Bonham, Executive Director at UHERO. I'm here with the first UHERO Focus video of 2024, and I'll be talking about our first quarter forecast. Now that we are largely past the bounce back and the economic growth associated with recovering from the pandemic, we expect growth to slow down in 2024, and going forward, growth will increasingly come from local activity, construction activity. Some of that is federal, some of that will be rebuilding on Maui. And on Maui, of course, we'll see some growth coming from the recovery on Maui. We've seen a partial recovery of the visitor industry on Maui and a partial recovery of the labor market. That has proved a little bit stronger than we had anticipated, but clearly that's going to take an extended period of time, and the path to recovery is very, very uncertain. Overall, tourism has held up remarkably well in 2023. And this chart shows us visitor census, the average number of people on each island. They're all indexed to 100 pre-pandemic. So what this means when you see the straight lines at about 100 for all counties, with the exception of Oahu, is that all the counties had visitors at or above pre-pandemic levels throughout the beginning of 2023. Oahu was still behind a little bit because of the continued recovery in the Japanese market. And then, of course, you see the dramatic drop. The 50% of Maui's visitors went away immediately after the fire, but also the partial recovery. We've recovered about half of those lost visitors on Maui. And the other thing the chart shows is that there was this growth in other islands, right? There was this substitution away from Maui to Kauai and the Big Island in particular. And then there was also some growth on Oahu associated with a strengthening of the Japanese recovery. So the overall visitor market, visitor spending in particular, showed a very similar pattern. It started off the beginning of the year very strong. In fact, in the first quarter of 2023, real inflation-adjusted visitor spending was roughly on par with the highest level that we'd ever recorded back in the early 90s. But then as the year progressed, by the time we got to December, real visitor spending was 5% below a year earlier levels. And that was almost completely because of the decline in U.S. visitor spending associated with Maui. By the end of the year, U.S. visitors were spending in real dollars 11% less than they were a year earlier. For the whole year, 2024, we think visitor arrivals will grow modestly, around 2%, and real visitor spending will shrink by about 2%, or about $500 or $600 million. So more broadly speaking, thinking about the labor market, the overall state labor market was relatively strong throughout 2023, and with the exception of Maui, we saw unemployment rates coming down. This partial labor market recovery that I was talking about for Maui, we see that in the unemployment claims, which peaked at 8,800, roughly 8,800 back in the middle of, back in September, middle of September 2023, and have come down very sharply. By the end of this chart, by December, actually this data goes all the way into February, we had unemployment claims down around 3,500. Unfortunately, what's happened is we've seen sort of the easiest labor market recovery, right? When the fires happened, the labor market was incredibly tight, and so it was possible for people to find work elsewhere. We've seen most of that, and now the progress on bringing unemployment down is going to be harder and slower going forward. And then importantly, some of these workers who claimed unemployment benefits all the way back in August and September, their benefits will be expiring. They'll be running out, and they will no longer be receiving unemployment benefits in coming weeks and months. Statewide, what we see is all counties are seeing progress on bringing unemployment down. Statewide, we expect the unemployment rate to trend towards 2% near the end of the decade. Maui is right about 6% right now, still much below where we thought it would peak. We expected that Maui was going to peak in the 10% range, and we've already started seeing the unemployment rate come down, but still it's going to be several more years, really all the way out into 2027, 2028, until we see the Maui unemployment rate get down on par with other counties. Now, the differences that we see in the labor market across the state are very closely related to changes in the labor force, changes in population, and what we've seen is that population, the gold line here is Oahu, and this is another one of these lovely index charts that we like to use so much. So this is population for each county indexed to 2019. So this is pre-pandemic population, and you can see that the slope, the line for Oahu, the orange line, has declined actually it's declined ever since 2017, but it shows declining population. So when you're below 100, you're below pre-pandemic levels. You can also see the decline in Maui population, right? We think that the population of Maui has probably already declined post-fire by 3,000 or 4,000 people. And all the way out here at the end of the sample, Oahu and Maui are still below 2019 levels of population. Now, in contrast, the Big Island has grown population. They've grown labor force. It's the only county that has significantly added to labor force, and so that creates more of an opportunity for ongoing growth on the Big Island. But this slow population growth is really a drag on all the other counties, and so with little or no population growth, little or no labor force growth, over the next 3 to 4 years, we expect total payroll jobs to grow less than 1%. We expect total real income to grow by about 1.5% to 2%. And the latter, real income, has actually benefited from declining inflation. Wages have been outpacing inflation really over almost the entire 2023, and that's true even with the uptick inflation that we saw at the very end of last year. So inflation has reaccelerated on Oahu. This is the Urban Honolulu Consumer Price Index, up to the high 3% range, and has caused us to raise our forecast for inflation for 2024 to 3.4%. So to summarize, the overall picture is one of a slowdown this year as we've sort of completed the post-pandemic recovery, and we're dealing with still some lagging recovery of tourism and labor markets on Maui. But then going forward, a little bit more growth associated with the rebuilding on Maui. Long term, because of weakness in population growth and labor force growth, all the growth rates sort of trend towards long-run equilibrium levels of less than 1% job growth and real income growth approaching 1 to 1.5%. Mahalo.